Hello everyone, welcome back to Stock Market Meridian. Today is 8th July 2026 and you're watching today's pre-market report. Let's begin our video with global markets. Starting with the US markets, all three major indices ended the previous day's session firmly in the red. Moving to the European markets, only the FTSE 100 index managed to close with slightly positive bias, while the remaining major European indices finished the session in the negatively. Now looking at the Asian markets, Japan index witnessed heavy selling pressure. The index closed nearly 2% lower yesterday and have opened today's session with another 1% gap down, indicating continuous weakness. Chinese markets are also ended the previous session in the red. Meanwhile, South Korea experienced one of the sharpest decline. Although the markets recovered significantly from the day's lowest levels, it still ended the session with a loss around 5% yesterday. And again today, the markets has once again opened sharply lower than 3.5% gap down, suggesting that selling pressure continues. Overall, the global market sentiment remained extremely weak, and this global cues could influence today's Indian market opening. We will discuss about GIFT Nifty and its implications for today's market at the end of this video. Now let's move to commodities. In the international market, US WTI crude oil is currently trading around $71-72 per barrel, while Brent crude oil is trading at nearly $75 and $76 per barrel. In the Indian commodities market, crude oil futures gained over 2.3% yesterday, reflecting renewed buying interest, while natural gas futures ended the session with gains of nearly 0.8% yesterday. Now let's see the precious metal segments. Indian gold futures closed around 1% lower yesterday, while international gold futures are trading nearly 1.2% in the negative. Similarly, Indian silver futures ended the session with losses of approximately 2.2%, while international silver futures are also trading nearly 2% lower. Overall, precious metals remain under pressure, whereas energy commodities continues to witness strength due to ongoing global developments. Now let's check ADR's data. Yesterday, on the negative side, HDFC Bank, ICICI Bank and Reliance Industries ADRs closed in weak. Meanwhile, on the positive side, Infosys, Dr. Reddy's Labs and Wipro ADRs ended the session with strong gains. Overall, the ADRs data indicated that banking sector may witness some weakness, while the IT sector is showing signs of positive momentum for today's trading session. Now let's move to FIIs and DIIs data. Yesterday, both FIIs and DIIs remained relatively inactive, with overall participation staying quietly low. FIIs were net buys of 393 crore rupees, whereas DIIs net sellers of 383 crore rupees. However, if we look beyond the cash market and analyze their derivatives positioning, the picture becomes much more interesting. FIIs continues to maintain a strong bearish stance in the index futures, medium bearish view in index options, while remaining medium bullish in stocks and individual stock futures. On the other hand, DIIs are medium bearish on individual stocks, slightly bullish on index futures and largely neutral in stock futures and index options. Retail investors continue to remain optimistic, holding strong bullish positions in index options, medium bullish positions in index futures, and maintain a neutral outlook across the remaining derivative segments. Now let's check economic calendar. Yesterday, there were no major economic events. Today, investors should closely watch two important developments. First is US crude oil inventory data, which could influence global crude oil prices and energy-related stocks. Second is the largest update from FOMC meeting, as any comments regarding interest rates or monetary policy could impact global equity markets. And tomorrow, the key events including US initial jobless claims data and the US existing home sales report, both of which may influence market sentiment. Before moving further, a quick reminder. Every morning before market opens, I upload pre-market report, and also every evening after market close, I bring you a detailed post-market report covering everything that happened throughout the market trading session. So if you don't want to miss any important market updates, make sure you stay connected with Stock Market Meridian and subscribe to our channel. Now let's move to the geopolitical updates. A major geopolitical escalation has once again shaken the global energy markets. A Qatar LNG tanker and a Saudi crude oil tanker were reportedly targeted while passing through the Strait of Hormuz. This incident has immediately raised serious concerns regarding safety of one of the world's busiest energy shipping routes. Following the attack, the Saudi foreign minister officially accused Iran of targeting Saudi vessels and warned that such actions threaten global maritime security and international energy supplies. Saudi Arabia also stated that Iran would be held fully responsible for the consequences arising from this attack. At the same time, Qatar issued an official diplomatic protest, demanding that Iran immediately stop actions that threatening regional stability and global energy flows. The Qatari government even summoned that Iranian deputy ambassador to explain the incident involving the LNG tanker. The situation escalated further after the United States Treasury announced that licensing to complete withdrawal of authorization related to Iranian crude oil production, exports, and sales. According to US officials, Iran's recent action in the Strait of Hormuz violates international expectations, and also Washington warned of serious consequences. As supply concerns intensified, both Brent and WTI crude oil prices witnessed a sharp rally. Adding further tensions, reports indicated that US military launched powerful strikes inside Iran. According to US Central Command, the strikes were carried out in direct response to Iranian attacks on 3 commercial vessels passing through Strait of Hormuz. One LNG tanker operating nearly Oman was reportedly hit and caught fire. The military operation involved both US Air Force fighter aircrafts and naval tactical aircraft. Reports suggest that the targets include Iranian air defense systems, surface-to-air missile sites, anti-ship missile installations, drone launch facilities, and several port infrastructure locations. Iranian state media also confirmed multiple exploration across several strategic coastal regions, nearby port facilities. Simultaneously, the United States revoked the temporary sanction waiver that had previously allowed Iran to export crude oil. Under the revised order, all Iranian oil-related production, transportation, and sales activities must be completely down before July 17th. This combination of military escalations and tightening sanctions immediately created fresh supply concerns across global energy markets. As a result, crude oil prices surged sharply from around $69 to nearly $75 per barrel, registering an almost 6% jump within a short period. Investors should closely monitor this situation because further escalation may directly impact inflation, global markets, and crude oil sentiment sectors in India. Next geopolitical update is Prime Minister Narendra Modi has arrived in Australia for the highly anticipated annual Leaders Summit with Australian Prime Minister. Welcoming the visit, Australian Prime Minister stated that the partnership between India and Australia has never been more important for ensuring peace, stability, and economic growth across the Indo-Pacific region. The discussions are expected to focus primarily on 3 major areas. The first is defense and regional security cooperations. The second is expanding bilateral trade and investment. And the third is enhancing collaboration in advanced technology and innovations. A major strategic focus on this discussion is also a securing reliable supply chain for critical minerals such as lithium and cobalt, which plays a vital role in electric vehicles, battery manufacturing, and clean energy technologies. Apart from official meeting, Prime Minister Modi will also participate in India-Australia CEOs Forum to promote businesses investment and will address members of the Indian diaspora. Guys, if you are finding these updates useful, don't forget to like this video and share this video with at least one friend because your support helps our channel to reach more investors every single day. Moving on, now let's look at company's specific updates. Midwest Limited has announced a significant international partnership aimed at strengthening its presence in the global rare earth supply chain. The company has signed a memorandum of understanding with Perminas, which is Indonesia's state-owned strategic mineral enterprises. The partnership aims to jointly explore and develop the complete rare earth value chain, including exploration, mining, processing, refining, and manufacturing of rare earth magnets. Midwest Limited will oversee mining and mineral processing activities, while Midwest Energy Limited will provide the technology required to establish the rare earth magnet manufacturing facility. So India's National Research and Development Corporation under the Ministry of Mines will provide technical expertise throughout the project. At present, This is only a framework agreement. No final consideration has been disclosed. Next, Minda's board has approved 320 crore rupees of investment to establish a new greenfield manufacturing facility in Chhatrapati Sambhajinagar, Maharashtra. The project will execute it through its joint venture with Japan's Turkish Company Limited. The new plant will initially add production capacity of 2.4 lakh seating systems annually. Commercial production is expected to begin during the fourth quarter of financial year 2028, with further expansion planned until financial year 2031. The company has already secured its first major order from leading automobile manufacturer. Additionally, Minda will invest another 93 crores into the joint venture to support further expansion. Next, NTPC Green Energy has approved the issuance of 2,500 crores worth of unsecured non-convertible debentures through the private placement. The bonds will carry a 7.27% annual coupon rate with a 10% maturity, ending in July 2036. The funds raised will primarily be utilized for capital expenditure, refinancing previous capex, providing financial support to subsidiaries and joint ventures, and meeting general corporate requirements. These debentures are also proposed to be listed on the National Stock Exchange. Next update is Sonata Software reported an annual turnover exceeding 10,700 crore rupees, with more than 90% of its revenue generated from IT consulting, cloud modernization, software development, and digital platform solutions. The company currently operates from 11 offices in India and 24 overseas offices, serving customers across 17 countries. Exports contributed nearly 39% of total consolidated revenue. From an ESG perspective, Sonata has committed to achieving carbon neutrality by 2030 and net zero emission by 2050. And the company also reported zero regulatory penalty related to cybersecurity, data privacy, or advertising compliance during the financial year. Next, Orchid Pharma has entered into an exclusive licensing and supply agreement with Russia's leading pharmaceutical company, Pharmasynthese. The partnership will commercialize an advanced antibiotic used to treat complicated urinary tract infections and several hospital-acquired pneumonia. This medicine holds specific significance because it is the first new chemical entity developed by an Indian pharmaceutical company to receive approval from both US FDA and European Medicines Agency. The agreement represents a potential business opportunity worth nearly $178 million over the next 10 years. Next, Axis Bank has successfully priced an additional $100 million tranche of its additional Tier 1 perpetual bonds. This issuance will be merged with the previously issued $500 million AT1 bonds, taking the total issuance of $600 million. These perpetual bonds carry a 6.8% annual coupon rate and are intended exclusively for international investors. Also, the notes are proposed to be listed on India INX and NSE IFSC. Next, Ceigall India has received appointed dates to commence construction on 3 major highway projects with combined value of approximately 4,050 crore rupees. The project include 2 6-lane greenfield highway in Jharkhand and 1 4-lane access controlled greenfield highway connecting Indore and Ujjain in Madhya Pradesh. All 3 projects are being executed under the hybrid annuity model, providing strong long-term revenue visibility for the company. Next, Embassy Developments reported an impressive 868 crores in quarterly pre-sales, representing an exceptional 338% year-on-year growth. The company has already sold nearly 59% of the inventory launched during the previous financial year. Cash collection also increased by 54%, reaching 496 crores during the quarter. Next, HCLTech subsidiary company Actian has integrated Jaspersoft embedded analytical platform into its existing data management portfolio. The integration follows HCL Software's successful acquisition of Jaspersoft. This strategic move combines data management, business intelligence, and artificial intelligence into one comprehensive platform. And the acquisition also expands Actian's global partnership ecosystem across 44 countries, strengthening its enterprise customer base. Finally, let's look at GIFT Nifty data. Yesterday, GIFT Nifty closed at 24,250 level and also today opened at same level. moving towards downside. So that's all for today's pre-market report. If you found this video informative, don't forget to like, share and subscribe to Stock Market Meridian. I will be back this evening with a detailed post-market report. Until then, thanks for watching. Signing off. Bye bye. Jai Hind.